Okay, we are recording. Hey everyone, welcome back to Poplar Preparedness. I'm here with Jonathan from Genesis Gold Group. He has 30 years of experience in the business of precious metals, and we'll be getting into that. He's got a lot to share with you in the market, as well as a lot of experience on this particular topic. Our topic is, the importance of preparing your retirement and whatever funds you've set aside, protecting it from inflation and recession. And so I'm so glad you're here with us, Jonathan. Thanks for joining.
Thanks for having me, Steve. I appreciate it.
Yeah. Now you've been in the industry for 30 years, but could you just kind of real quickly just give us a couple of the highlights of kind of what you've been doing for those 30 years?
Gosh, okay. Well, first of all, probably from my accent, you'll notice I'm from overseas. I'm from London, England, and London financial markets is really I first got involved with precious metals, and I actually used to work for the London Metal Exchange. So I worked for a lot of big American banks out there, such as Merrill Lynch, Morgan Stanley, and we used to trade base metals, aluminum, zinc, tin, lead, etc. And upon my introduction into base metals, I was also introduced to precious metals such as gold and silver, for example. And I never forget, one of the biggest traders in London always used to say to me, Jonathan, if you're going to invest in gold, the best way you can invest into it is by physically holding onto it. And that always stuck with me, like holding onto physical gold. It was something that I've always been passionate about. So as my career developed, I stayed in the precious metals markets. I was even a commodity pool operator for a small hedge fund, holding a Series 3 commodities license. And as a registered financial consultant, I was actually consulting for big banks over in Asia, Hong Kong, Malaysia, Indonesia, Thailand, for banks like HSBC and AIG, and educating their financial advisors on how to offer gold products to their investors. Because in Asia, they believe in buying gold is through jewelry, and that's not the smartest way to buy gold. You want to buy coins and bars. So, over the years, I've had vast experiences in precious metals, and now obviously through Genesis Gold Group, we help people's retirement accounts by backing up their own dollars, because the government isn't going to do it for you, right? With assets like gold and silver.
Well, that leads kind of into our first question, which is just kind of, how stable is silver and gold? Like, why is that a good hedge against issues?
Well, I'll say, gold and silver has never been worth zero. Okay, so it always has that intrinsic value. We can look at new markets emerging like cryptocurrencies, and we've seen them wiped out overnight. And in this economy where we're kind of facing, a deep recession, people are looking for a flight to safety and security. And that's exactly what gold provides. It's a safe haven. And I tell people, by shifting into gold, you want to create that financial bunker. And obviously, we don't have a crystal ball on what's going to happen tomorrow, but we definitely have a roadmap. And what that roadmap looks like is by simply being educated and understand what's happening right now. Because even when you listen to the big banks, JP Morgan, for example, the CEO, Jamie Dimon, came out recently. He said, brace yourself for an economic hurricane, right? And brace yourself is the last thing you want to hear, because that's what the pilot says before the plane goes down, brace, brace, brace. So you never want to hear that statement with your financial assets. Bank of America saying interest rates are going to be so high, it's going to cause a housing recession. But we need to raise interest rates to combat this super high inflation. And inflation, which is something we can talk about, because it's the biggest confiscation of wealth, in my opinion, that's happening today. So by having an asset that's really inverse to all this market instability, well, the answer is gold. And that's why people shift into assets like gold, because it's the ultimate hedge against financial issues that we're currently seeing domestically and also overseas.
There's a lot of clever things people can do in the markets to try to make money off of markets going down and markets going up. But what I love is the idea that precious metals, it's not so much about getting rich with them. It's rather not going bust with them, right?
Right, absolutely. And And I tell people, when you look at gold or look at any investments, you've got to look at 5-year windows. I mean, gold is up about 38% for 5 years. Silver's up about 28% in the past 5 years. And you've really got to understand that when you're looking for financial stability, you want to have an asset that's proved itself and has a test of time. And I always tell people, if we went back in a way machine, and we went back to the year 1920, right, and you had a $20 gold piece, which was a 1 ounce gold coin, and then you had a $20 bill. Well, in the year 1920, Steve, they were both worth the same. And in fact, they would both buy a man a brand new suit. Now, today, that same $20 gold piece, the 1 ounce gold coin, you'd probably be paying $2,000 an ounce for a coin, because they have high premiums right now. It would still buy a man a brand new suit, right? But that $20 today wouldn't buy you a tie for that suit. So you can see how over time, the dollar has been losing value, and this is the erosion of inflation. And this is what people really need to understand, that besides all the world problems that we're facing, inflation is really the biggest confiscation of wealth that's really hitting America today, and it's eroding the purchasing power of people's dollars, and that's very important to focus in on.
Yeah. That kind of leads back to kind of one of the things you mentioned before about the difference between holding like a promise or a paper precious metals versus actually holding precious metals themselves. What is the difference between a lot of these things we see, like GLD out there? It's an ETF, SLV, all these other fancy paper products. How is that different than actually having physical precious metals?
Yeah, it's a good question, and people actually do ask us about this. What's the main difference? And really, if you're going to invest in gold, you want to hold into the physical stuff. That you're holding onto it. That's the real security. You drop it, it hits your foot, you go out. Like, you want the physical stuff in your hands. ETFs, electronically traded funds, GLD. You're not owning the gold, you're owning a piece of paper that says that you own gold. So there's not a real hedge, it's tied to the market. So if the market drops, actually you will lose money. Another way you can invest in gold that you're probably aware of is gold mining stocks. Again, there's many variables with that, because really you're investing in, who are the directors of and the board members of that company. If they don't mine any gold out of the ground, you do not make any money, and it's still a paper-derived product. So the safest way to invest in gold is to actually physically hold on to it. And you can hold on to it, put it somewhere safe, or you can even put it in retirement accounts such as IRAs and 401ks, and that's something that we highly recommend.
Now, that is something that you guys do or Genesis Gold Group. There's that situation where if you have your money in the IRA or 401k, you can't just pull it out and have it delivered at your house without tax implications, right? Could you just talk a little bit about what you do at Genesis Gold Group for retirement accounts?
Yes. Well, when it comes to retirement accounts, you want to keep them tax deferred. That's a must. And the IRS does allow you to roll over your existing IRA and put it into a self-directed IRA. And the power of a self-directed IRA is basically more choices. And I'm a big believer that more choices are better than less choices, right?
Yeah, sure.
So in a self-directed IRA, you can still be invested in, risky assets that Morgan Stanley, JP Morgan, says going to cut in half in the next 18 months. You can still have those, but you can also have other assets in your self-directed IRA, real estate, cryptocurrencies, oil rights, mineral rights, precious metals. So having a self-directed IRA, which is what we help our customers establish, gives them the opportunity to roll out of, risky equities right now and have something physical. So still an IRA, you still get your statement. The only difference is you would have a different custodian. And when you receive your statement, if you have X amount of dollars in gold, that's exactly what you have. It's held at a licensed depository. When you take required mandatory distributions, or RMDs as we call them, you can even take possession of the gold. So there's very clever ways of being able to own gold, not just by holding on to it, but also by putting it into your retirement account. And if people are wanting to know more about how to do that, this is definitely the time to protect yourself, because I always tell people, it's like flood insurance. You don't buy the flood insurance after the flood happens. So with what we're facing right now, now is the time to, look at where your assets are parked. And if you're really looking to move to higher ground, then gold and silver is going to really provide you that protection that you're looking for.
Quick question for you. Are we in
Yep.
retirement? Are we in, are we in a recession, or are we going into a recession, in your opinion, or your
I think we're already in the recession. It's a bit of an iceberg here because we only see the tip of it. What lays ahead is going to be a lot worse. When you hear these top economists, there's a gentleman, Nouriel Roubini, they call him Dr. Doom because he successfully called out the 2008 market crash. I mean, he's been very vocal, even on a lot of news channels, saying, the market is going to have a complete reversal. You even have famous day traders, Michael Burry. You may have saw that movie, The Big Short, where Christian Bale played him. Well, he just recently liquidated $16 million of his stock portfolio. So when you have big banks saying that we're going into a recession, top day traders, even Jeff Bezos came out from Amazon, said, look, get ready to bury down the hatchets. I think, a lot of these issues are going to come along from supply chain issues, which people don't talk about that much. I know you have on your shows, but supply chain issues, I think, are going to be huge for starting a global recession. Obviously, interest rates as high as they are, that are going to double again next year. The housing market could be the first domino that drops that could cause another global recession. So, today's market and today's landscape is so different than it was just a decade ago. And it's more of the sum of all parts. And if you think everything's becoming rosy and it's going to become better, then maybe gold or silver isn't for you. But, like me, if your feet are planted firmly on the ground and you look at this horizon and you see what's hurtling towards us, you should be concerned. And if you are concerned, protecting your retirement dollars that are most at risk, because since the Biden office came into power, $2.1 trillion has been wiped off the 401k and IRA market. That's a staggering amount. And in fact, clients that we speak to, reportedly tell us, we're losing 10% per quarter. They don't do anything. That's 40% a year. People can't afford to lose these retirement dollars. So by shifting into a safe haven, it really does make sense.
All right. Well, we're going to have your contact information down below in the description, as well as a pinned comment down there that they can have a further conversation with you about their particular situation. I recommend that, folks. This isn't financial advice, but it is life advice. And I think that if you're still in stocks and bonds, you should seriously consider moving your retirement accounts to physical metals one way or another. So, and Jonathan's a good guy here. Point the right way here.
Yeah, thanks.
Thank you so much for joining us, Jonathan. And I look forward to speaking with you again in the future and maybe having you back on here.
Thank you so much for having me. I appreciate it, Steve.
All right. Thanks so much, Jonathan. I'll talk to you later.